Good afternoon, everyone. Long time no see with the YouTube community. Hope you guys are doing just great. Want to make sure I got the audio on. Long time since been on the YouTube, so I want to make sure everything is smooth. All right, looking good. Everything looking good on my end. Thank you, mate. All right, guys, we are back to it. Back on YouTube. Glad to be here with you guys today. For our long-term members, you guys know the drill and what it is we're going to be going into here today. Intermarket analysis, what we're looking at, more importantly, why we're looking for it. And then after, we'll have a conversation at the end and looking forward to answering any questions you guys may have. So with that, like I said, excited to be here with you guys on the YouTube. Denisha, happy Sunday. Hope you're doing awesome, Denisha. Kennedy, dude, where have you been? Long time no see, Kennedy. Been placing my focus on taking my private group to success. And that's what's been preoccupying me here these past few months. It's a full-time job coaching other traders to be independent. And it's not easy, but that's where my attention has been. So now that additional time to working on the YouTube, I also want to provide value for those of you guys that may not be able to invest in yourselves, in your education and trading. So we will be doing these weekly forecasts after discussing with my team. We'll be looking to do one of these a month for you guys here on the YouTube. And then the other week, the intention is to upload the PDF. As you guys see here in front of me, the new structure we have for our weekly forecasts are in PDF format. And it also gives our group a handy guide throughout the week to refer to all these key levels that the algorithm refers to throughout the week. So 2 weeks out of the month, you will be getting weekly forecasts from us, one in video format and the other one in just a PDF form. Again, I understand not everyone's able to invest in themselves, and we want to do what we can to make sure that even those of you guys that aren't able to can still get value where you can. So with that, that's the plan going forward. And again, we'll open up the Q&A at the end. Hope you guys brought your notepad. Let's get right down to the business here today. Let's make this full screen. All right. Thane Trader, that's great. We're so happy. Glad to be here. Cyclops, good day. Trust you're doing great. Yes, sir. I'm doing good, my man. Hope you are as well. Daniel, we missed you, man. Missing you as well, brother. Glad to be here, Daniel. Ahmed, yes, sir. New setup. Hey, Ahmed, long time no see, brother. Hope you're doing good, my man. Yes, sir. Staying at the B&B here for the week, really out here for the month with my team. A lot planned, a lot in the works for Adora Trading going forward. And I'm excited to share that with you guys going forward. Big Bear, good day question. Do you ever trade live in front of a live audience? Do I ever? Yes, I do. All right, guys, let's get right down to it. Let me make sure. Man, not signed into YouTube on my phone. Give me these darn ads. All right, let's get right to it. So weekly forecast for August 18th. So the economic calendar for this particular week, it is August. So if you'll notice, the economic calendar has been a bit lighter in the month of August. I know it's the same employment reports and data that comes out, but because the month of August is relatively light, you'll notice some weeks don't have a whole lot of high impact news. And we see that we don't have any high impact news this week until Wednesday. So I will be having my focus on Wednesday PM session, Thursday morning, and really those are the main 2 days I'm going to be interested this week. Friday, we have Fed Chair Powell speaking in the morning. So if you want to trade that day, you can get there into the pre-market silver bullet 7 to 8:30. Usually gives a nice price run when we're expecting manipulation in a more heavy manner for the AM session. So that's the game plan for today. But as always, that will be sent in the weekly newsletter that we send out, highlighting exactly how myself, my team, how we're taking on each day of the week. And again, it's all based off the scheduled delivery in the economic calendar. So again, the lucky thing is with what we do, no guesswork at all. We know what we're looking for, why we're looking for it, and more importantly, when we're going to be there. Moving forward, so the assets we will be looking at today, dollar, and then we're going to confirm the dollar with treasury bonds, as we usually do for that next level institutional perspective. And then we will go into Nasdaq. Now, I don't have specifically planned to touch on S&P. I know there are quite a few S&P traders, but for the purpose of having targets, knowing where the asset class you're trading S&P is going, having those key levels on Nasdaq, just transpose them over to S&P, and that'll get you what it is you need. For currency traders, I will not be going into currencies as much here. However, the dollar gives you everything you need. If you know where dollar is going and you can confirm the dollar with the treasuries, that gives you everything you need in the currency market. So if you just know how to make that transition from, okay, dollar is going to do this, so the expectation is currency should do this. So that gives you more than enough insight going forward. So let's get right into the intermarket analysis. Dollar weekly chart. So we have bearish institutional order flow within this weekly consolidation profile, right? So we are in a higher time frame weekly consolidation, and we have been throughout this entire year. So also keep in mind, why would I share that? The reason we share that is because if we're in a consolidation, that's going to affect the price delivery. It's going to deliver in a different way than when we're in a higher time frame expansion. So that helps myself, my team of analysts, know to be more conservative with our price targets. I'm not calling targets thousands of pips away from market price. It's just very surgical strikes. Again, because the higher time frame consolidation indicates expectations should be managed. However, just because expectations are managed, that does not mean targets are not being called and hit every single week. So as long as the market structure remains bearish, I will look for further discount targets to the 102 big figure number, which is the weekly fair value gap. That 102 big figure aligns with that weekly imbalance. Then if we accelerate through this fair value gap, I'll watch for the rejection block below the market price on the weekly time frame. What we've seen here is we have a breakaway gap. This gap was unable to get filled in. This imbalance here, unable to trade up into it, but what you'll notice if you put the quadrants on that wick here, we hit the lower quadrant, indicating it's weak. It's not able to trade any higher. So I don't need it to trade into that imbalance. And then we see heaviness. If you extend this weekly fair value gap through on your own chart, one second.
Lo tienes abierto, pero en otra pantalla.
Okay. ¿Ven aquí? Está en la cámara, solo esa hueá te vete.
Tienes que compartir el ICT. Tienes que compartirlo.
Not sure.
Bueno, abre otra ventana.
Okay.
No,
Párate el stream.
en Plus.
Okay.
Send to, okay.
All right. Yeah, I know I'm live, Matthew. I appreciate it. All right, are we good now? Are we sorted out? Yeah, all good? All right, guys, sorry about that. Like I said, been a little while since we've been on the YouTube, so having to knock off the rust. Apologize for that. So it has been brought to my attention that you guys did not see anything that I shared. So it looks like we'll have to take it from the top. I do apologize for that, guys. Let's go back into it. So economic calendar, as I was saying, you guys probably followed me along. 1 second. Economic calendar for this week. Wednesday PM session is my day of interest because we have the meeting minutes at 2 p.m. And then Thursday morning, I'll be expecting clean price action based off the high impact news drivers we have. Friday will not be a day that's of interest to me because we have Fed Chair Powell speaking at 10 a.m. And one of my sayings is, whenever the Fed is involved, I don't touch it. I don't want to get anywhere near it. So I will either looking to trade pre-market or not at all. I only need 1 or 2 trading days to do phenomenal. And that's really all I'm looking to do within my trading. So those 2 days are the days I'm going to be focused on. But as I was saying, I think audio was coming through. So you guys were still able to hear me. Yeah, okay. Yeah, I apologize for the confusion again. We will have the Sunday newsletter that will touch on every single day, what we're looking at as a result, and how, like I said, my team and myself are going to be attacking the week ahead. So the assets we're going to be looking at today will be the dollar, treasury bonds, and the Nasdaq. As always, we use the dollar to confirm what we're looking at, or treasuries to confirm what we're looking at in dollar, and then dollar gives us that risk on, risk off sentiment for currency traders, commodity traders, or index futures traders, which is again predominantly what myself and my team, what we specialize in. That does not mean we're limited to that, but that's primarily the asset class that we're looking to trade. And if you just look at the higher time frame and you compare index futures with currency or with commodities, it's a no-brainer why index futures are, in my opinion, one of the best asset classes to be trading as a professional. All right, so going right into the intermarket analysis, starting with the dollar, and then as always, we'll confirm that with bonds. Vlad, happy to see you, man. Glad to be here. Yeah, Ahmed, all great. Happy to have you back too, brother. We don't see any charts. Thank you, Adam. Slide's not moving. Thank you, Ahmed. Appreciate the heads up. Thank you, guys. Michael, thank you. Matthew, I think Dylan doesn't know he's live. Yeah, I knew I was live, brother. Love the Spanish. Thanks, my man. The ladies like it as well. Ahmed, perfect. All good now. Thank you, sir. All right. We should be good now. All right, weekly chart. Bearish institutional order flow continues within the weekly consolidation profile. The importance behind the consolidation profile, as I was mentioning, is it helps us manage expectations. So again, it does not mean no targets can be called. It does not mean there's no clarity, but it does mean that I'm not going to call targets thousands of pips away from market price because I understand the market profile that we're trading in, right? And real market profile, not like the scam with the volume and all that stuff. So that helps us manage the expectations for what we're looking for. So we can still call targets, there's still precision, and we do this every week. However, we have to manage those expectations because we are in that higher time frame range bound condition. So as long as the market structure remains bearish, I'm looking for further discounts at the 102 big figure number, as I mentioned, and that overlaps with this weekly fair value gap. If we accelerate through this fair value gap, then I'll watch for the rejection block. As I was mentioning here, we have a breakaway gap. This gap was unable to get filled in. That's significant. This imbalance repriced to perfectly, and then we aggressively broke down. This imbalance here, we did what? We closed down below it. So that tells us what? If we're going to reach into the target that we had 3 weeks ago, which was this low, what's it going to use this imbalance as? Inversion. I don't have that on my chart. I like to keep it relatively clean, but if you extend that, trades up into it, money breaks down into the sell side. So this imbalance here was unable to get traded into last week, as I was mentioning this wick here. If you extend the quadrants through, you'll see we weren't able to get above the lower quadrant of that wick, indicating the market's extremely heavy. And then we saw the breakdown as a result. Weekly fair value gap, and again, the rejection block are my key targets on the weekly, especially considering all the weakness signatures that we're seeing. Moving right along into the daily chart. So daily institutional order flow is heavily bearish. So I will anticipate further downside in the short term. What tells me order flow is heavily bearish? For those of you guys that have been with me for some time, you guys already know what we're looking at, but I know we do have some newer people joining us here as well. So daily chart, look at this imbalance here, unable to get traded up into. This imbalance here, not able to get closed in. This fair value gap here, unable to get the consequent encroachment, couldn't even get up to the midpoint. That's an algorithmic signature that's telegraphing to informed traders, people that are looking for these signatures. It tells them what to look for, essentially the same way it does and tells us and you what to look for as a result. So we see we were unable to get up to the midpoint there. That's a signature. Those are things you want to read into on all time frames, 1 minute, daily, hourly, whatever time frame you're trading or you're doing your analysis on for that particular session. Daily imbalance, we created a swing high inside that fair value gap and broke down, creating another fair value gap, trading up into it, look at the bodies respecting it, and then we see breakdown from there. We did have an SMT here with euro. Euro did take out the high here, whereas dollar did not. But then seeing how we traded in that imbalance breaking down, that tells me to look for the relatively equal lows here. And the reason that's gray is because that was a sell side target we had weeks ago when we were all the way up here. We were looking for that, and that's already been delivered. So that level is gray because it's not as significant in my analysis. So relatively equal lows here, that's the immediate draw. Again, so the equal lows are the low-hanging fruit. Then we have the daily fair value gap below market price for further discount targets. And you can see that represented by the volume imbalance here. I think yeah, it should not be in the way. Okay, volume imbalance here, and then the daily fair value gap in the sell side. So those are my targets as long as the order flow remains bearish on the lower time frame, and then we'll confirm that with what I'm looking at in the bond market. All right, 4-hour dollar. I will monitor how we trade inside this 4-hour fair value gap, or if we trade up into it at all. And the breaker. The breaker I'm referring to are these two down close candles here. If we're going to remain bearish, then I'd want to see it aggressively start to accelerate into these discount targets. The market's already retraced and rebalanced all this inefficient delivery. We've repriced it, redelivered, repriced, and left it. So now that's a balanced price range. There's no need for the market to come up into that. And that's why the breaker is so effective, because the breaker essentially is creating two passes in a price range, making it effectively balanced. So you never want to see a breaker violated, and that's why it's the strongest algorithmic reference point in your trading. So again, as long as you remain below that 4-hour fair value gap, looking for further discount targets. Moving right along into treasury bonds. So intermarket analysis and bond yields have confirmed the sell-off in dollar. So we've been looking for lower dollar for some time. And again, that's been confirmed with the sell-off we've been seeing in the yields. Every single asset class moves based off fundamental factors, but it may not be fundamentals in the way that you may have been traditionally taught to look at them. Fundamentals are interest rates, and interest rates are going to be the deciding factor in every single sustained price run you see on any asset class. So sustained price runs occur when fundamentals are in alignment, but fundamentals are derived from interest rates, and that helps you cut through all the noise, whereas a lot of people may tend to get distracted in the day-to-day events, the economic calendar, and trying to make their trading decisions based off that. In my opinion, that's a really difficult game to play. So what I do is I cut straight through the bullshit, and we get right to the heart of the matter, which is what these markets are moving on and why. So I'm still monitoring the SMT at the lows, but for the time being, I'm just going to stick with the current narrative of weakness, right? We see yields are weak. I don't want to try to call a bottom in a market that's trading heavily lower, but we do have an SMT there that I'm monitoring. So I'm monitoring it, but again, I want to stick with the underlying narrative that the market is still heavy and bearish. Well, got about 70 guys. Good attendance for not being here for a while. All right. Daily chart, premium valuation was rejected quickly, indicating further weakness, likely for yields, as long as the hourly and 4-hour order flow remains weak. That's a mouthful. What am I saying? We have a dealing range from high to low. That's the dealing range because that's where the energetic run begins. So I mark that range out with my fib. I put an equilibrium, and that gives me premium valuation and discount valuation. When bearish, I look for premium valuation to be rejected aggressively because that confirms to me we're going to keep breaking down. Market makers don't like to keep price in a premium when the market is heavily bearish. So based off how we traded up into a premium and broke down, I want to see that continue if we're going to see lower dollar. So if you're watching dollar or euro or for currency traders, you want to watch the bonds as well. Because if the bonds are confirming what you're seeing in dollar, that's going to be a move with institutional sponsorship that's going to be clean and low resistance. When markets are decoupled, they're not moving how they should. That does not create low resistance liquidity run environments. So by understanding how to weigh those factors out, it tells you when you want to be pushing hard and when you want to take a step back. All right, moving right along into Nasdaq. The weekly fair value gap last week that we were watching to gauge order flow was traded through, providing us the insight that the market is now bullish and to look for premium targets. So last week we were watching this weekly imbalance. We did have the equal lows there, but we had to have that confirmed because we've already dropped all the way down. We swept the bodies of the candle. And actually, I'll touch on that point on the daily chart. So let me keep focused on what I'm saying here. Weekly imbalance here, that was going to be a key level to validate order flow. Why? because this imbalance here overlaps with this one, and it's a mitigation block. So if it was going to sell off, it would have had to have shown me that signature in here, but it didn't, right? It just kept trading higher. So we were looking for premium levels to see if the market would break down. The way I trade my style is I let the market tell me what it's going to do. I don't stress out about what it's going to close, what we're going to do each day. I know what key levels I'm looking for. I know how the algorithm is going to refer to those levels if I'm going to get what I'm looking for. But if it just keeps trading through it, then that's fine as well. And that's why we were looking for higher prices on Thursday when we were live tape reading and I'm giving you guys the PhD on order flow. And then on Friday, when we're calling out premium targets, managing our trades, sending all those levels to you guys, how I'm using the end dog, new day opening gap as a target, all these weekly levels. And then even my man Tommy came in and was sharing his trade, how he was managing that live. And because if you notice, Nasdaq didn't take out the intraday high, but S&P did. So if you know the smart money perspective, S&P and Dow already taken out the high. So you distribute your position in Nasdaq. So sharing all that live with you guys, and these are the insights that allow us to know the market's not bearish anymore. Look for premium targets. So for higher prices, I like this weekly or bearish order block here as a initial upside target. And then we have that weekly imbalance. And then how we trade there will determine whether or not we're going to make a run into new all-time highs. Daily chart. So we had a strong reversal. Strong reversal last week, trading to and through the premium levels we were watching. Premium levels were the bearish order block and the imbalance, right? That was the initial target last week because we already dropped a ton. So one thing I want to take your attention to is because we were bearish for these weeks here, looking at all these discount targets. But what made me cautious to not call lower prices here and want to see how we traded these key levels? And it has to do with the implied dealing range. So for those of you guys that have been working with me for some time, for the daily chart traders, for those of you guys that are trading the daily chart in our group, remember what I was coaching you when we were looking at this price run from this low to high, and we were breaking down? Where do your short positions have to be taken if you're trading this time frame? Well, there's a range low, range high, so equilibrium's about here. So the best shorts occur in what side of the implied dealing range? Premium. So the best shorts occur here and here. This fair value gap, that's not a short for me because it's already in a discount. So you could take that, but you have to understand it's lower probability because it's already in a discount. High probability shorts occur in a premium. And that logic applies to any time frame, daily, weekly, 1 minute, whatever time frame you're trading. So we traded down, swept the bodies here, and then we saw an aggressive rejection. One of the key insights that told me the market was going to be bullish is how I'm able to read order flow. And I'll explain that to you guys here. We have a wick, 50%, extend that through. We hit that wick 50%. And then we aggressively displace higher. So then I took my attention to the order block. That was my next target to the upside. But then how did we trade there? We traded up into the order block. It did not trade up into the order block and break down and reject heavily in here. All right, so what does that tell me? A strong close inside this key level. And then we took our attention to higher prices based off those signatures we were getting at these premium targets. So again, that's why you don't short discount. You have to have a rule-based process with what you're doing. And this is a perfect example of why discounts are low probability shorts. From that, again, supported all these key levels, closing above that fair value gap. That's important. That's influential in my analysis. And then looking for the buy side here. So again, now that we have traded through this bearish order block here, which is this up close candle, I will now anticipate it to act as a bullish breaker to support price into premium targets. So what I'm referring to is that this level, if bearish, will act as resistance. But if it indicates that we're strong and we're trading through it, that tells me, that tells informed speculators that the market is going higher. So we have the swing high here, buy side, swing high here, fair value gap, and then the external range liquidity at all-time highs. So what I will want to see going forward, I have this labeled as a breakaway gap. I don't want to see this gap traded into if we're going to be bullish. Trading into that gap, it doesn't invalidate bullishness for me, but in an ideal scenario, if we're going to reprice up into here and I'm going to be trading that, I want to see that gap left open because that's going to indicate this is going to be a supercharged run into these premium levels. So those are the factors I'm looking at. However, do keep in mind, If we trade down into that gap here that I have labeled the breakaway gap, it's not the end of the world. It's just not as strong as a price run as I would want to see. So again, the premium targets are going to be premium buy stops here, here, and here, and premium inefficiencies. All right, 4-hour chart. So what I'm going to be using to confirm now what I'm looking at on the weekly and daily chart is the 4-hour and 1-hour, because that's going to help me read the order flow and tell me what I should be looking for. So last week, you guys know we were looking at the breaker here, which is the last down close. And again, how we traded there tells me everything I need to know for the week. So the breaker was our initial target, indicates to me that the order flow is bullish. Well, let's take it from the beginning here. We have a fair value gap and a breaker. You trade up into it, and we do what? We displace away. Imbalance here, left open, left open. So for those of you guys that were live, you guys already heard all this, but it doesn't hurt to hear it again because it does repeat. So what in institutional order flow allows you to trust a move is going to be explosive? It's going to keep running. And this is what allowed us to trust higher prices in our analysis and our live trading last week. Imbalance, left open, trade up into it, we immediately reprice away. So the fact that these imbalances are unable to be traded into, that's indicating that the market's in a hurry to get somewhere. If it's only going to one of two things, where's it in a hurry to get to? The imbalance here and the liquidity here, all of which were upside targets for us last week. Why? Well, the breaker, did it lend resistance? Did it trade up into the breaker and break down? No, right? It's showing us it's exceedingly bullish. Imbalance is not able to be filled. Imbalance is not able to be filled. Imbalance is not able to be filled. So as you start to read that and learn how to read order flow and market structure, it's going to confirm to you everything that you're looking for. This fair value gap here, it was a target for myself, for my group last week, that we were looking for this premium level to be traded into, beautifully repriced up into. And now I want to see that act as an inversion fair value gap, which means I don't want to see the market get down below it. I wanted to see it act as, in a more traditional sense, support or resistance is what I'm referring to there. So I want it to be supported, and I want to see the market spring higher from here if we're going to remain bullish. And then the last note, I have this here just for myself to remember to bring up to you guys. Keep in mind, it is an election year. So what that means for me is it's heavily manipulated year. And the reason being is because the way they've basically conditioned people in the United States to see the economy, it's all through the lens of the stock market. So if the stock market is good, everything must be phenomenal. And the people that control the markets, they use that sentiment, especially on these election years. So election years have the tendency to be extremely bullish because, again, it sells that idea that the economy is great, things are going phenomenal, and the average common person that doesn't know any better would think, oh, well, that's the truth. I mean, if the stock market's going higher, everything, it must really be great. So if you understand that, it helps you be ahead of the curve. It helps you prepare for what it is that we're likely to see. So I would not be surprised to see all-time highs. But you see many people saying, well, the economy's bad. There's all these factors in the economy, from just like our debt to GDP ratio, just so many fundamental factors that indicate the American economy is not doing well. But what you have to keep in mind is the markets aren't reality. They're rigged, they're controlled, and they're manipulated. So if you understand that, it cuts through all the bullshit, and like I said, takes you right to the heart of the matter. So that's what I'm looking at on the Nasdaq. So if we did get up into all-time highs, that would not be surprising to me because of the context of where we're at. However, hopefully I've given you guys what tools we're going to use to confirm that. If we're going to see those targets delivered, what's that going to look like? And if it doesn't, how's the market going to tell us? And that's what hopefully I've articulated clearly here in this one. So with that, guys, let me go ahead and pull up my TradingView chart. And I'll take any questions or concerns you guys may have. Let me pull up the YouTube chat. All right, guys. Matthew, I'll be busy for 8 hours during the whole day this week. What should I do to still build confidence, build experience this week? Just to annotate and after the charting session? Yeah, great question, Matthew. So what I'd recommend, if you're not able to be in front of the charts that day, there's recording softwares that are really helpful for me. You can put like a 15, 5, and a 1 minute chart, and then whatever your operating hours are, let's say you're a 9:30 to 11 o'clock trader, and that's the time you're predominantly focused on. Well, then you can just screen record for that hour and a half when you would be doing whatever else it is you're doing. And then after the session, or after you're done with your obligation, then you can go back and you can watch it. You can get an organic feel for how the 15, 5, 1 minute, how those time frames are painting, how they're referring to the institutional reference points, study your model, and you can get an organic feel for it, as opposed to like market replay or something that, in my opinion, isn't very effective in simulating real market conditions. Because real market conditions, you have to be patient. You have to let the candle form. You have to see a candle that's going to be bold blue, but then reverse and trade lower. And you just have to get that organic feel for that. And in my opinion, the best way to do that is by just recording those 3 time frames while you would be at your session. And the reason I recommend that to you is because I know your trading style is more scalping. But let's say you're a higher time frame trader for someone else that may be hearing this. Hey, I don't really trade the 1 minute. Okay, great. So you'd have the hourly, 15 and 5 minute, right? Or whatever time frame you're doing your trading on. So that'd be my recommendation, to still get the reps in, still get your experience, even if you're not able to be front of the charts live. Vlad, it's been a long time. Happy to see you. Great to be back. Unicorn Queen, good to see you, Dylan. Glad to have you. I'm at huge respect, but I'm a fundamental trader too, and it is not bullshit. There is always why behind the price moves, all with respect, of course. Amen. That's the great thing about trading. There's a bull and a bear. There needs to be 2 opinions for the markets to even happen. So I respect everyone's method of trading, especially if you're someone who is calling the market live. Back up the talk with what we're able to do, and you can do it live. Hey, my respect to you, brother, regardless of how you're coming to the conclusions with your trading. So all the respect to you, Ahmed. Do what works for you, my man. Justice, happy to be back. Glad to have you. Unicorn Queen Dylan, do you think it's possible to make your cursor arrow a little bigger? It's so small that when you put it on top of the candle, especially a black, it disappears. I'll keep that in mind. Thank you, Unicorn Queen. I'm actually on the Monduo setup. So I have my 16-inch MacBook because I'm traveling, in case you guys didn't know. And then I have these 16-inch laptop extenders. So it's beautiful. It's like I basically have my home office everywhere I go. Not quite that good, but it gives me what I need. It gets the job done. And it's on a 2K monitor that I'm streaming on right now. So I'll have to talk with my tech guy here after the stream, and I'll go and see what I can do for you, make that easier for you. I do apologize if you're not able to see that well. But hopefully by the next time we'll have it smoothed out. CD, can you look at crude oil futures? Absolutely. CLU. Yeah, I believe we rolled over last week. Let me just make sure. Yeah, August contract closed out, so now I'm rolling into CLU because for the September delivery contract. So yeah, let's go into crude oil. So higher time frame weekly. I was looking for strength last week to see if we could continue, but it indicated inside this weekly imbalance, strong rejection. So personally, with where I'm at right now in crude oil, in my analysis, I'm 50-50, I'm neutral. And I'll go ahead and give you my reasoning why. From this range low, this range high, we are trading perfectly at equilibrium. There's equal highs, there's equal lows, and there's a shit ton of uncertainty around the world with regard to what's going to happen in the Middle East next. The market's just waiting for that next shoe to drop. What's going to happen with Taiwan? What's going to happen with the currencies? I'm not sure if you guys see that some of the oil moguls, they're now accepting oil in other currencies. So now that's upsetting the petrodollar. So all that to say, there's a lot of things going on. And in my opinion, once that next shoe drops, that's when we're going to see that movement in the crude oil market. So what I'm going to be monitoring here is which way we displace away from equilibrium. When we're at equilibrium and there's a equal low and equal high, and we're at 50%, that is one of the most difficult market conditions to trade in. So with my expectation going forward, I'm neutral until we displace away from equilibrium. And then in which way that displacement is, that's going to give us the insight as to where then it's basically going to be the tipping of the hand algorithmically in terms of what direction we'll be looking for. So that's what I'm looking at on the weekly time frame. However, because the weekly is in consolidation, the great thing is with what we do, it's all fractal. So maybe the weekly is not that clear. That's why we refine it through the time frames. And as a scalper, just because I'm saying it's not clear on the weekly, the reason I say that is because I don't have long-term targets to give. But intraday, if you know how to read order flow, if you know how to find liquidity, you know how to find those losing traders stop losses, if you know how to do that, then you have setups every day, even in a consolidation profile. So let's go ahead and refine that down to the daily chart. All right. So what I wanted to see, what I was looking for last week is I wanted to see if this breaker could support price. And we dropped down into the breaker imbalance, and then we started trading higher. Once I saw what you'll see on the hourly time frame, extend that through. So when we drop down here, we drop down into that daily breaker and fair value gap. Once we traded up in, I went long for a swing trade. But the way I read the order flow is I wanted to see the imbalance here do what? Support price. As soon as we closed back down below that fair value gap, and then we started to reprice down, completely killed the trade because it wasn't giving me the signatures that I want to see. And then that's why I killed that trade in crude oil last week, because it wasn't giving me the signatures and institutional order flow that I look for, that those that have been trained by me look for as well. So we broke down. That confirms what? It's a lukewarm trade. It's not good because it's not giving us that algorithmic feedback that the market's in a hurry to reprice into the premium levels. So that confirmed to me the market's not strong, and then we ended up breaking down from there. So here's what I'm watching on the daily time frame. We still are respecting the breaker, and my stop loss for that trade was below the breaker. But the nice thing is, if you know how to read order flow, if you're taught how to do it properly, you can invalidate a trade before it even gets down to your stop loss. So I still would be in the trade theoretically, but because of the signatures in the order flow, that told me what? It's not giving me the signatures I want to see. So I just aborted the trade. So with where we're at now, I'm still watching how we trade inside this breaker here. But as I said, any side could be valid. We could trade down to the sell side, or we could go up into the buy side. And I'm very comfortable not knowing, because for those of you guys that may be developing, you may not know. So for you to see someone who is a consistently profitable trader also be vulnerable and say, hey, I don't know, and that's okay. I know what I'm looking for. So as I get more information, I'll know what I should be expecting. And that's great for developing traders to hear, because always hearing people say, yeah, I always know where the market's going, or, we're 100%, we never lose, that creates the wrong perspective in developing traders that then poisons their mind and really never lets them achieve that consistency because they're chasing loss. So I don't know, and that's the reason why I'm very comfortable sharing that with you guys, and in fact, it's to your benefit. So as I get more clarity in the crude oil market, I'll share that, I'll make that analysis available to you guys so that you guys have those key levels. But right now we have sell side, we have buy side, and we're at 50% of the range. Drop down to the 4 hour. So then I will refine this to the 4 hour now, because the daily is not clear to me anymore. So I'll just refine it through the time frames. So what I'm going to look for in the 4 hour, we've traded higher. We've ran out the buy side. So that was one of my first targets last week. And then that just gave a beautiful run into these premium levels here. Once we reached into that premium buy side, we then broke down. And then again, we traded into that daily breaker, but we were unable to continue higher. And then we traded higher, swing high, broke down. So for crude oil traders, you want to monitor your order flow on the 4 hour and hourly time frame. And then from there, you can refine into your 15, 5, 1 minute and find your intraday setups. So as of right now, the order flow is bearish on the 4 hour. Again, we've taken buy stops, imbalance respected, imbalance up close candle here, indicating it wasn't able to get above that. So once we created that swing high, broke down, trading through the low with a fair value gap. So on the intraday, I am bearish crude oil based off the hourly and 4 hour order flow. And that's what you're going to want to look at to confirm or invalidate the bias you're looking for in crude oil. Yeah, so that's all I have for this market here. We have the mitigation block or breaker, whichever you want to call it, was traded up into the previous week. So how we trade there will be influential. So if we're going to be bearish, we'll stay below that, break down. If bullish, we'll get above it, and then likely work up into the equal highs here and here, here, and here. So that's how I'll be playing crude oil this week. And usually I just send my updates into the private group, but since I'm talking about it here, I'll give you guys the updates in the Telegram as well with what we're looking for and why we'll be looking for that. So that's the business on crude oil. Went a little longer than I thought on that one, but at least I'll give you guys the detailed analysis. Ahmed, I'm in a swing short on crude oil. Dylan, how do you feel about that? I see lower prices. Yeah, I think you're in line with the lower time frame order flow, my man. And as long as you continue to read that, engage that, and it's giving you that feedback that you're bearish, hey, let the dogs run, brother. Jang, glad to have you back, bro. Glad to be back, brother. The Unicorn Queen screen recording is a great idea. Thanks for the tip, Dylan. Absolutely. Yeah, because there's several people that I've worked with and coached that run businesses, have full-time jobs, and they're not able to be in front of the charts intraday. But that does not mean you cannot learn a skill set that can change your life forever. You can still get in the work. You can still get in the reps. It's going to take extra time because you have to take the time to record the screen and then study it after your long day at work. But you know, success is not for the weak, especially in this business. So that's some insight that I give those that I'm coaching that are in that type of situation. Justice, let's dive into yields. The 30-year. Yes, I touched on yields already. That'll be up here on the recording, my man. And let's look at gold. I haven't looked at gold in a while. Yeah. So because we've been looking for weaker dollar, what does that give us in terms of the tone for risk on, risk off? Because if you look at gold, US dollar, dollar's what in the name? It's second in the name. So if it's second in the name and it's weak, that's going to be strong for the name that's in the first part of the pair, which is gold. So gold's bullish. Why? Because, well, one, yields are bearish, right? So yields are indicating bearishness, but also dollar's bearish. So if dollar's bearish and that's confirmed by yields, now you have what I taught at the beginning of the stream. That's where your sustained significant price runs are going to occur, is when it's overlapping fundamentals using interest rates. So now that's why we're seeing lower yields, lower dollar, and they're confirming each other. So what does that indicate for other asset classes? We're going to see sustained moves in the opposite direction. So we bring that to gold, and then there's the delivery on gold. Personally, gold's not an asset I like to trade just because of the price action. It's a lot of back and forth for me personally. But like I said, there's a lot of ways to make money in this market. You know, if you found what works for you, then man, you're killing it. So gold's trading higher, and I'll use dollar to confirm that. But so far, order flow remains bullish. What I'll look for gold to remain bullish is this order block should support price. So there's no need for us to get below those down close candles. So what I'll suggest for gold is just keep trusting your buy models and heavily monitor dollar to confirm what you're looking at in the gold market. And again, the reason why I say that, you may say, well, what do you mean it's sloppy? Well, look at the daily chart here on gold. And then look at the daily chart on an asset class like Nasdaq. You know, in my opinion, it's not even a comparison. But that's my style. Again, that's what works for me, and I know, you know, everyone has their own way of making their money in the market. So that's the business on gold. But like I said, heavily monitor dollar, and that'll give you what you need on the metals side of trading. And man, silver has been absolutely flying from what I've been seeing. Yeah, so silver got some equal highs, so you can confirm that with gold. Use that for your SMT, and then we did get a pretty large SMT with silver and gold to the downside, though. Expecting further upside, especially if we get that acceleration to the downside in dollar, and all those factors I covered indicates that market is heavy. Adam, did you trade the CPI short at market open? I did. Yeah. Yeah, I slapped around into index futures pretty good that day. Yeah, I went short. After, well, CPI hit, it took the buy side. I wrote down the shorts, and then we wrote it back up into the buy side, continuing the bullish order flow. Yeah, so I slapped around index futures pretty good on CPI. Absolutely. Yeah, good call, Ahmed. Absolutely. Silver Six Sister, no doubt, brother. Ahmed, thank you so much for the detail. Man, appreciate you, brother. That is why you are the GOAT. Man, I wouldn't call myself that, but Appreciate it coming from you, my man. Keep killing it, brother. Matthew, hey Dylan, I have school events all week during the day. Should I just annotate my charts before and after the session? Any suggestions to best gain experience for me this week? Okay, yeah, when are we? Oh yeah, we're getting into August 18th. So yeah, that time is rolling around. It is school time. Yeah, so what I'd recommend for that, Matthew, is all the habits that you've learned over our time working together, you want to keep doing that. So your analysis in the evening, your analysis before the day starts. And then what you can do from there is just record it. So you'll already have expectations. Like, for example, when I'm sending the pre-market analysis every day, I already know kind of what I'm looking for, depending on the market structure and a lot of factors. But for the most part, we know what we're looking for and what levels we're going to be watching before the market opens. So I would suggest you do that. Have an opinion, look at what you're expecting in price delivery, and then screen record. And then after the day comes back, I wouldn't even recommend look at the charts at all. And then just look at your screen recording, and then you can get an organic feel as if you were trading it live. And then you can watch the candles print. Oh, there's my model. I would engage that. And then you can study that and get a feel for if it worked or if it didn't. And then that's how you can still build your experience, but still have a full-time job, be it university, run a business, or whatever the case is you have to do. And then any other suggestions to best gain experience this week? That would be my recommendation, to just get the reps in after. And yeah, outside of that, there's nothing I would have in addition to that that would help you out outside of what you're already doing, right? Because again, we've been together for some time. So again, continuing the habits that we've built throughout this time that have given you the success you've been seeing, and then just building on top of that with having to make it work within your busy schedule day to day. Not easy, but like we said, brother, can make it work if you have the desire. Matthew, how do I do that though? Just like leave the computer recording for 6 hours? Yeah, you can do that. This gets into the technical answers. This is way above my pay grade. But I will say, and I can have Abraham follow up with you on that in the Discord. He'll get you right. But you can use OBS, is one you can use. You can use the Mac, but the reason why I wouldn't recommend the Mac is because if you're recording for 6 hours, it's recording it in high quality definition. So then that's going to be a file that's going to weigh a crazy amount. So there's like OBS, and you can just put it to record on HD 1080 quality. So it'll be a big file, but it's not going to be something that just completely wrecks all your storage. So that would be an idea. The only other thing I could think of, yeah, it would just be recording. I know Camtasia is another one that's useful. OBS is a good one. Just whichever one works for you. You do want to make sure that while your computer's asleep, though, that it still records. And I think Camtasia and OBS should do that. But I would definitely double check on that, because if you're going to be in school for some time, it's worth the investment of your time to find out a way to still get the reps in day to day. That would be my suggestion. Alistair, share X to record screen, smaller size and easy. Awesome, Alistair. Thank you very much, sir. So yeah, you can take a look into share X and see what other options they have and just find out what works for you, my man. Good deal. Joe, thanks, Dylan. You touched on a lot of key points. We'll review the recording. Thank you. Enjoy the rest of the Sunday. You as well, Joe. Hope you had a great trip to Tampa, my man. And like I said, next time we'll have to make it work, brother. Matthew, okay, I'll do that. Make sure with the OBS. Yes, sir. Yeah, you do want to make sure that when the screen shuts off, it's happened to me where I'm recording a trade live that I send to you guys after. And then I take partials and I have to go handle other business. And I'm going to the coffee shop and whatnot. And then my screen just goes to sleep. And then the recording is completely shot. So you definitely want to make sure, you don't want to make that mistake where you think it's recording, it goes to sleep, and then you've got nothing. You've got a blank screen to look at for 6 hours. That's no fun. It's only this week. Then my schedule calms down and I can trade the AM session. You got night class. Awesome. Yeah, that's how it was for me, brother. I feel you. When I was in university and I was, grinding, you got to make it work. And that's one of the things that I did was put my classes towards more the evening so I could be dialed in for the morning session. So good deal there, brother. about joining the mentorship. I have a good strategy, but I struggle with patience and psychology. Do you help with that? And also, do you trade live with the group? Okay, so it seems like what you need is the more psychology and the patient side, right? You have a model, you know what you're looking for. So it seems like where the struggling point for you is the ability to just wait for the trade, let it happen, and not do a bunch of dumb stuff in between, which is really every trader's kryptonite, right? It was for myself, right? Can have perfect trades and have beautiful trading when the A plus setups form, but then it was all the dumb shit I'd do in between that would keep me from being profitable. So I completely understand that. And what I would recommend, really, if that's all you need, then I'm not sure that our group may be a good fit for you. One of the things I would recommend would be tweaking your trading plan, making sure, like for example, let's say you notice that you can only take 3 trades, right? And you take all 3 of those trades before we even get to 10 o'clock because the patience isn't there. Well, then you want to write in your trading plan, all right, I'm going to wait till after 10 o'clock to do my trading. So the process that you want to do to help with that, Unicorn Queen, will be journaling extensively, seeing where are the issues coming in and nailing them down in the specifics. So if you can nail it down specifically, like for example, my problem is I take 3 trades before 10 o'clock. Okay, now you can have a discussion with a professional, someone that is consistent, and they can tell you and guide you and say, hey, all right, well, if this is the problem, well, then just limit yourself to 1 trade before 10 o'clock or limit yourself to 1 trade a day. Because by limiting yourself to 1 trade a day, you're going to wait for that perfect shot, like a sniper. One of the things that we coach and teach is that a sniper has plenty of shots throughout the day, just like a trader. Man, you have that button in front of you at all times. You can click it whenever you want, but you have to wait for that perfect opportunity where the wind isn't blowing, where the distance is just right, where there's nothing obstructing the shot from the scope to the gun to where that target's being hit. And essentially, a sniper has to pass up on a lot of shots before he pulls the trigger. And it's the same thing with the trader. You have to be disciplined enough. You have to know exactly what you're looking for and wait for that perfect shot to walk through your crosshairs. Then you take it down. So with the limited understanding I have with where you're at in your trading and what your difficulties are, that would be my recommendation for you to focus on going forward. And then if you feel like you need extra help and you want more guidance from professionals that are sharing every day, live trading every week, then you may want to consider joining the Discord. But that's up to you, and hopefully you have some insights you can leave this session and take away from and immediately implement into your trading. So hopefully that helps you out there, Unicorn Queen. Matthew, read The Best Loser Wins. Yeah, absolutely. That's a great one. The Unicorn Queen, yes, I just keep moving the stop loss and just messing up. Yeah, so what you'll want to do if that's the case and you feel yourself moving the stop loss is just set and forget. Normally, I don't teach that. I usually don't teach people to just put a trade in and leave. The reason being is because if you've been with me live or you've watched live price action with someone who knows how to read order flow, you can see if a trade is not valid before it hits your stop loss. So I use that insight. I'm reading order flow rigorously. Every minute candle is giving me new information. So I'm reading that at a high level, and that tells me, should I cut the trade? Should I move my stop loss? But it's all based off what I'm seeing in the charts. It's not emotional. It's not like, oh, well, you know, I'm in 300 open profit and I've never seen this much profit before, so let me just jam up my stop loss, right? It's not necessarily like that. It's more reading the order flow. Okay, 3 PD arrays were just violated on the 1 minute chart, and my stop loss is 20 handles below market price. I don't need to see it hit my stop loss to know it's wrong. I can just close it out there. So the benefits of watching the price action, if you know how to read price action, are really helpful in your trading. But if that's the issue you struggle with of essentially micromanaging the trade, you just don't let it play out, that's the only time I would recommend put in the trade and walk away. Because that's not going to let you micromanage it. It's either going to hit stop loss or take profit, and whichever happens, if you're not over leveraged, should not be a big deal. So that's the only case I would ever recommend that to someone I'm coaching, because there's a lot to be gained in watching the price action while you're trading it. But again, if you're micromanaging it and that's what's causing you to not see your success, then I would recommend set your limit order, set your take profit, and literally just walk away. And then after you do that for a couple weeks, you'll say, you know what, if it hits stop loss, it's not a big deal. If it hits take profit, it's also not a big deal. And then you can desensitize yourself, come back to the charts, and then watch the order flow and not micromanage the trade and mess up what is a beautiful trade from what it sounds like. Yeah, my win rate is currently 85 to 89%. That is a phenomenal win rate. That's beautiful. Yeah, that is top notch. Joe, sounds great, brother. I know you have touched on crude oil, but does crude oil inventories have any effects on price on a weekly basis as it's released? Absolutely. Every week, Wednesday, that is influential in the price action for crude oil, and I use it every week to establish a narrative. Why should the market do what it's doing? When should it create that higher low of the week based on market structure? So absolutely, you do want to use the crude oil inventories as a volatility injection, just like we do with Nasdaq and S&P. So it's essentially the same logic that you're going to be applying there as well. Unicorn Queen, okay, that sounds good. Taking trades before 10 a.m. more often than not causes me issues, but my setup occurs before 10 a.m. often. So what you'll just have to balance is the risk to reward there. So your journaling will tell you, are you making more from 9:30 to 10, or are you losing more? And if it's not a profitable endeavor for you to trade that time, and I would recommend you just demo trade that time and then work your strike rate up. So if you notice, all right, 9:30 to 10, that's a really problematic time for me, but you still want to take the trade, then just take it on your demo, because then you'll get more experience as a result, get more confidence, and then over time you can then apply live fund trading to whatever model that it is you're looking for. Yeah, thanks for the tips. Absolutely. Appreciate you joining us. Joe, thank you. Absolutely, brother. All right, guys, see the questions starting to simmer down here. All right, well, I'm going to get going. Enjoy the rest of my Sunday. Usually was going to do it at 4, but have to meet with an agent here today and hopefully looking to close out. That's been a lot on me. Lady driving me nuts once once everything else she wanted. So want to look to get that wrapped up here this week. And I do have that this evening. But before then, I'm going to look to enjoy some sun and hit the beach with the fam. So with that, guys, appreciate you joining us here today. Let me make sure there's no more. Make sure I'm not leaving anyone hanging. Yeah, absolutely, man. Thank you. All right, guys. Should be all good. I don't see any more chats. Unicorn Queen, I'm learning to be process focused instead of profit focused. Beautiful. Love that. And what a great place to end the stream on. Great point, Unicorn. And absolutely, if you focus on the components that go into success, that's going to get you to that success. Instead of just focusing on the success, that's usually where the problems come in. So absolutely. And we'll leave off on that one. And absolutely, last thing I actually want to mention before I do get going here, we will upload the PDF into the Telegram for you guys to refer to as well, and give you guys the hookup for the week. So again, I want to share my gratitude. I appreciate you guys joining us here today. Do hit that like button on your way out if you found value here with me here today, and we will speak on the next one. Take care, everyone. Stay safe.